Good morning, everyone. Hope you guys are doing well. Today is Tuesday, June the 23rd. Overall markets, as you can see, pretty big drop in the overnight session. Overall, SMH is down 5%. Overall markets down 2% on the NASDAQ. ES down about a point percentage and a half. So pretty big drop with some of the semiconductors dropping here yesterday. We ended up holding key levels, basically closed back inside this range. And this morning, we'll kind of talk about the key levels coming into today with, of course, this pretty big pullback here on the SPY and Qs. Coming into, of course, MU earnings as well tomorrow, which is going to be key. But yeah, with that being said, hope you guys are doing well. Am I lagging? It should be good. Let me check. Frame should be good here. Video and sound should be good as well. What's up, everyone? Yeah, can you guys hear me and see my screen? What's up? What's up, Kelvin? Good morning, Victor, J Tanzi Norris. Good morning, Maria. Good morning, P1 Carlos, Martin. Good morning, Good morning, Night, Gerald, Lamit, Joshin, Sinna, B Roots, Vate, Beezen. What's up, everyone? Yeah, good morning. Is a short leg all good? Perfect. Okay, let me pull up the economic calendar here, and then we will head over onto the chart. So, first things first, key levels that we have coming into today, or sorry, some of the red folder news events that we have today as well. Tuesday, 9:45, which is this morning, we have the flash services PMI. If you have any audio issues, it's most likely on your end. So just refresh the stream and you should be good. As for tomorrow, not too much. Thursday, we do have core PC price index. You have the final GDP numbers along with the unemployment and the revised consumer sentiment that is going to be on Friday. As for some of the overnight headlines that we've had, there's not too many major headlines. We just kind of had a pullback here. A couple semiconductors, of course, dropping. Right, Nasdaq futures tumble, led by tech stocks. Micron drops 9%, and of course, DRAM dropping here as well, kind of dragging down the overall markets. So there's really not too many news events that kind of cause this overall market sell-off. There's a couple other things going on with, of course, the war news that we have, but overall, let's kind of talk about it from a technical perspective, just a bit more so based off of the SPY and Qs themselves. So starting off here with the broader indices. So let's talk about the SPY first. The SPY, of course, is the one that's been more so lagging the markets, right? SMH leading the markets towards the upside. You can see we ended up closing close to all-time highs. Of course, now we're gapping down here back inside of its previous all-time highs. If you are on the QQQ, this one kind of right at its all-time highs, and you can see a little bit of rejection, whereas the SPY in itself is a lot weaker, and now we're back closer to that 735. So let's first talk about the QQQ. In this case, we're kind of rejecting right off this general area, which is your previous all-time highs, right? Not quite the exact all-time highs, but this general area, you can see some sellers are stepping in right off this this like 750 general area, which is at all-time highs. And now you can see prices kind of back down into that previous all-time highs area, which is our gap fill. It's also the area that we bounced from last week, where we end up having a push back up in towards that all-time highs. And now we're right back at the 719. So for upside, what did we want in the overall markets? We really wanted to see the break above our all-time highs, hold for continuation higher. That was the long case scenario for the broader indices. Now we're actually kind of rejecting off this level, making a double top and coming back inside the range. So now with the overall broader indices pulling back here, not as bullish as we expected coming into this week, of course, with the SMH and the Qs, with the SPY and Qs as well. It seems like we're a lot more neutral here, and we're kind of stuck, not stuck, but we're back inside of this range that we have marked out, which is that 690 to that 750. And if we just mark out the middle of the range, right back into the 719. Right now we are at equilibrium, but what is the next level that we have here on the Qs? Next key level support is actually kind of all the way back down into that 700, right? That's the area that we bounced from originally. That's where we had this bounce earlier from May. This is the key level that we have on the Qs, and we'll kind of touch up on it. We'll talk about this more day by day. But the key level right here, 719, top of the range, 750. Of course, bottom of the range, 690. If we go into the SPY chart, SPY, as I mentioned, lagging behind the overall indices themselves, not quite even came close to that all-time highs level. Of course, the semiconductors and the memory names are leading the markets higher. Key levels for the SPY is our 748. So some people would argue that this is head and shoulders more so on the SPY chart. We kind of broke above, came back underneath, and now we're kind of rejecting. So more so the structure in this case is creating a lower high here on the SPY so far. And now you can see we're gapping down. We're back down into that 735. The key level support is actually all the way back down in towards our 730. So for the SPY, right now, right, showing a little bit more weakness, gapping underneath. We're underneath now the EMAs once again. Next key level that I have on the SPY is just going to be back down into that 730 here. So with that being said, let's kind of go into the lower time frames. Key levels, let's put on the levels that we have as well. So for the SPY, last week, we ended up coming all the way back down, filling the gap. Nice bounce, a little bit of consolidation. The key levels that we had yesterday was, of course, our FOMC high. We end up having a nice pop, but you can see kind of faded. And we end up closing back underneath the 746. And of course, now with this gap down, we're well underneath, or we're underneath our last week's lows. So key levels coming into today and moving forward is going to be that 738. If we do want to see some upside, we would like to see that reclaim back above for any sort of push back up in towards that previous day close. If we ultimately reject off that 738, we're gonna look for a potential move down in towards that pre-market lows and potentially this 730 on the higher time frames. If we're looking at the VIX, right now you can see the VIX is spiking once again back up in towards our 20. So we've had a little bit more volatility for June. As you can see, nice spike on the VIX earlier into the month, came back down, and now we're having another spike once again. So right now with the volatility picking back up, this just means we're going to be looking for a lot more shorter term trades, more day trades, and of course, less swing positions, right? The only thing you could swing regardless was names on the semiconductors and more specifically the memory tickers. There wasn't really anything else in the broader indices in the broader market. So you can see Google down, all these Mag 7 names are down. The only names that were green yesterday were, of course, memory. And you can see now the memory's dropping. What did I mention yesterday? If the memory drops, then the overall broader market's going to drop, right? And that's just because memory is the only thing that's holding up the markets. So, with that being said, the SPY and Qs, we're just going to have a lot more of a short-term thesis, just based off key levels. So 738 is going to be key coming to market open for the QQQ. Right now, we are right at our previous week's low. This is a very key technical level. As you can see, multiple touches. We end up coming back down last week. Nice bounce, push back towards the upside, and of course now we are right back down into that 720. So for the at least higher time frame key levels, we had this general area marked out 750, and you can see for the Qs we end up kind of rejecting off this area, right? This is our previous all-time highs. A little bit of reaction last week, yesterday pushed up into that 740, not quite hit the top of the range, but this general area rejected, and you can see pretty big sellers stepped in, and now we're having this kind of reversal here in the markets. So the key levels today and moving forward is going to be this 720. So 720 here, as you can see, touch here, touch here, touch here. If we do want to see some upside above our 720, we can see a potential reversal. In this case, if we hold underneath that 720, we can see a move down in towards our 710 and below. So the key levels today is just going to be that 720, last week's lows. Similar thing with SPY, key level is going to be that 738. If we go on to the SMH, so let's go on to the daily chart here. So the SMH is the semiconductor ETF. This one ended up closing close to that all-time highs level. And now you can see we're getting a little bit of a pullback, right? Further away from the EMAs. We talked about that is a good sign where the market's eventually going to pull back down into a key level support. In this case, we have our previous all-time high, 640. This is kind of the exact level we want to see hold on the SMH in itself. So right now, we end up closing strong, as I mentioned. We're gapping down back inside its previous all-time highs levels. If we go onto the hourly time frame, let's go on to the daily, the hourly chart. Key levels that we have is our 640. So our 640 is key if we do want to see any sort of continuation. Let's just kind of mark out some of the levels. 640 is going to be key if we want to see a reclaim. Right now, the structure is still technically intact here on the daily time frame. On the hourly time frame, we're kind of right at that 640. If we ultimately flip back underneath, we can see a mean reversion back towards the downside. That's 610. If we want to see some upside now, we'd have to see some sort of V-shaped recovery, reclaim back above that 640 for a push up in towards that 660 here on the SMH. So as I mentioned, this is the semiconductor ETF. This is really the only thing that is holding up the overall markets. And right now, of course, it is dropping. So that's why we have a broader tech sell-off here as well. If we take a look at DRAM, let's go into the daily chart. So really, there are no signs of at least momentum slowing down. Of course, now we're gapping down. We're further away from the EMAs already after having this really solid push towards the upside. Now for at least the memory tickers, this is our previous all-time high. So this is actually a good technical area for at least the daily chart or even the weekly chart. This structure is still valid as long as you can maintain above this previous all-time highs. So let's actually go back onto that daily chart. Key levels that we have marked out in this case is just going to be that 71. So you can see break, we had our retest continuation. Now we're coming back down into the 70 area, 68. This is a good area for potential continuation, right? A lot of people, which is funny, is they will buy as it's overextended up into this 80, but as it dips, right, they would rather not buy the dip because now it's gapping down, right? You want to be buying in key technical areas. In this case for DRAM, right, this is the area that you want to be looking to engage in the markets for a continuation higher, right? Similar thing as last time, right? Pretty big sell off, and then we end up having some sort of double bottom continuation, right? DRAM, right? Could it bounce and have a V shape, or could it kind of consolidate, dig a little bit deeper? But this is our key technical area, right? 68 is going to be what we're looking for on this ticker. If we go back onto the hourly time frame here now as well, this is basically our exact spot, right? 68. We'll see if we can see any sort of buyer step in today for potential mean reversion. We do have a mini gap fill here as well, so we could dig a little bit deeper into this daily gap fill. But regardless, right, a potential 68 bounce or dig a little bit deeper down into this full daily gap, 65, and look for a potential higher low here on the daily for a pushback towards the upside. If you look at the IWM, this one not dropping as much compared to the broader indices. IWM, the key level that we have marked out is our 297. Ended up having a nice pop into yesterday, but ultimately had a decent candle close, but gapping down with the broader indices here. So for the IWM, structure still intact. We just like to see now this level hold 288 for continuation back towards the upside. All right, with that being said, let's go on to some of the futures charts that we have. As you can see, we kind of flip back below key levels. So some of the levels that we have marked out yesterday, 3,500, broke underneath it in the overnight session. Next level is actually all the way back down into 30,000. As you can see, we have multiple touches here. Currently, right now, we are breaking underneath it. So if we want to see a potential flip back towards the upside, we need it back above this 30,000. If we maintain now underneath, we're going to maintain at least a bearish bias coming into market open. For the ES, this one is actually down into a key technical level, which is the area that we originally bounced from, or the original double bottom here on that daily chart. So we are right at a key technical level. This daily chart, if buyers do step in, right, that would be a good area for, I wouldn't say a potential reversal, but this is the exact area you do want to see buyers step in here. For the ES, if we're talking about the NQYs, right after this gap down, if we close underneath, then we can see a move all the way back down in towards this low right here, right? If we're talking about the features, if the buyers, let's say, present themselves today, right, potentially have like a lower wick, we'd still be valid for structure wise. And this is the exact area we'd like to see it bounce from. It really depends on today's daily candle close. So we'll kind of look for intraday trades at least today. And we're open to playing both sides, of course. But the daily close, if you want to keep an eye on primarily the daily chart or even the weekly chart, this is our exact technical level, which is that 70, basically that's 7,400 here on the ES. So coming to market open, at least on the ES, key level is going to be this 7,400. We want to see if buyers do want to step in for a potential reversal back towards the upside. If we do kind of reject underneath our last week's lows or get underneath that 7,400, next level is actually all the way back down into, of course, that 7,320. So that's what we have on the higher time frames on the SPY and the Qs, at least coming into market open, at least for today. With this gap down, the main thing moving forward is we're just going to be keeping an eye out on the key levels, right? We're not going to have like a crazy long-term outlook. Of course, if we're talking about a perspective in terms of right 2 to 3 weeks out, the main thing that we have this week is going to be that MU earnings. And you can see right now with the broader markets already selling off, and of course with the semis pulling back, you can see the markets in itself are having even a bigger pullback. So what we're going to be waiting for is MU earnings. That's going to be key, of course, which is going to be tomorrow. That's going to be at Wednesday after close. At least for today, we're just going to keep an eye on the key levels. We're going to have more shorter term trades, more day trades and scalps in the markets until, of course, tomorrow. And we want to see how the market reacts based off that. So with that being said, let's go on to some tech names that we have coming into today here. If you guys do have any charts or any tickers, you guys can now drop them in the chat. If you guys are enjoying this so far, appreciate if you guys drop a like. If you guys haven't joined the free daily watch list, that of course is in the description below as well. All right, let's see. My bet is institutions are feeding negative reports to facilitate their option trading, especially pre-MU earnings. Same as happening last month. At least right now with the broader markets, we had a nice pop. Right now, you can see most people that are in the markets, right? If we're looking at any Mag 7 names, right? Google, as you can see, selling off. Microsoft almost down at our yearly or this year's lows. Meta, similar thesis. You can see the broader markets are selling off here, specifically on the tech side, right? And Netflix already at our low for this year. SpaceX kind of dropping here as well. What are the only things that are holding up? Really, AMD, and of course all the memory names, right? MU, SNDK, INTC. These are the ones that are doing the heavy lifting. And if the market wants to pull back, right, and more so in specific, if MU pulls back, right, it's not out the picture right now. You can see we've had like a couple sell-offs, right, down 20%. In this case, if MU pulls back, right, 20%, and all these other tech names, or sorry, all these memory names pull back 20%, that means, right, the SMH is going to pull back another, right, 5-10%. And of course, if the SMH pulls back 5-10%, that means the broader markets are also going to pull back, right? Specifically SPY and Qs, right? It wouldn't be out the picture where we can just see a retracement back down into the original area that we bounced from, which is at 700. Not saying we're going to push down into 700, but that's just kind of the thesis with if MU earnings, right, depending on how the market wants to react to that, right, we could have great earnings with MU and the markets could still sell off just because we're so overextended in itself. So we'll keep an eye on that. Of course, that's going to happen tomorrow and we'll have some more information after the fact. But yeah, with that being said, let's talk about some of the tech names that we have coming to today, more so in specific. Not really too much to talk about here on Tesla on the higher time frames. On the lower time frames, we're still ranging key level 416. Lower level is 388. So you can see high, low, going back to high, low, high, and now we're back at the low. So if we're on Tesla today, keep an eye out on our 402. Other levels that we can have marked out today as well is that previous day lows. Let's just mark out this. Previous day lows we can have marked out here as well. If you do want to see some downside, potential break and retest underneath previous day lows for a continuation lower. If we flip back above, we can see move back up and towards that 402. Nvidia, we're kind of rejecting off a key technical level here, daily time frame, right off that 210. So this is the line in the sand here, another rejection, and you can see prices reversing. So for Nvidia, if we wanted to see upside, we mentioned above 210, in this case rejection. Now we're coming right back down into that 200. So for Nvidia, key levels that we have coming into market open. Let's go here on the hourly time frame. So let's kind of draw out a couple levels here on the hourly. Key levels of support here. On NVIDIA, we can draw out our last week's lows, which is our 204. And then, of course, our other lows that we have marked out all the way down into that 200. If you want to see some downside today on NVIDIA, right underneath are basically last week's lows for continuation lower. Right, potential bounce play, we can see a move back up in towards right 205. This is a pretty big gap down in the overall markets, right? Down about 2.8% here on the Qs, SPY down about 1.3%. If the markets were to reclaim its last week's lows, would I expect a full-on V-shaped recovery up into our previous day close, right? This is pretty unlikely, right? If we were to trade inside of its gap, there's a chance we could see maybe 50% of the gap being filled, but it's very unrealistic that we're going to fill that full gap. So if we were to trade, let's say a potential reversal in this case, right? Our trade thesis would look something like this, right? Price, we're looking for a reclaim trade, and our stop would be underneath our last week's lows, looking for a reversal back inside the middle of the range, right? This is, right, of course, you take profits along the ways and then maybe trail some, not looking for that full reversal, right? Because that's pretty unlikely. So this would be more so the long thesis coming into today. If let's say the markets want to reject right off the bat, right? What is a short thesis? In this case, a shorts, you would have to have a tight stop. It would be more so a pop and fade right off the bat, looking for a tight risk entry for a pushback towards the downside, right? This would have to reject right off the bat, reject off your pre-market highs along with your last week's lows, and they have a very tight stop looking for a trend towards the downside. Right, you would not have a stop all the way back down up into that previous day close. Of course, you'd look for like a tight risk stop above that 722. So that's more so the thesis coming to market open for day trades, at least for today. Let's go on to AMD. This one on the higher time frames, key levels that we have marked out is our previous all-time highs. So for AMD, the key levels that we have is our all-time highs. You can see a little bit of reaction, and now we're kind of back inside this range. With the markets down about 3% here, AMD only being down 6% is actually not that big of a drop, right? Compared to really this whole run towards the upside, a 6% drop is very small in AMD. Let's look at this from a higher time frame perspective. Right now, we're kind of broke above, right? We tried break above last week, a little bit of rejection. Yesterday, another try and break above and a neutral close, and now we're kind of rejecting off this level. So for AMD, right, higher lows are being built. This is the exact level we want to see for continuation. Ultimately, now we're rejecting, and we're seeing a little bit of reversal here back towards the downside. So for AMD, now moving forward, if we do want to see some upside, there's really one of two things. All right, with the markets having a little bit of rejection off this all-time highs, the daily chart is still bullish. Where can it build up a higher low, right? We kind of had this cup and handle forming here as well. Now we're kind of invalidating this, right? price more so now seems like it's going to kind of return back into consolidation, and then it would have to be eventually that break back above that 560 for a move higher, right? If markets you want to see the most bullish case would have to get back above that 560. If not, right, we can see a little bit more consolidation, and it's going to take a little bit longer to develop. So for AMD, key levels that we have marked out coming into today, let's just mark out that previous all-time highs once again. Other levels that we have marked out as well is going to be our last week's lows. So we can mark this out and drag it over, 510. If we want to see a bounce on EMD today, we need to see that 510 bounce for a potential, right, move back towards the upside. If you want to see some shorts underneath 510 potential, hold underneath 510, you could be looking for a continuation back towards the downside. Apple, a little bit of a drop here. Apple still keeping on that previous all-time highs. Google dropping here as well. A lot of these ones are in good technical spots, right? If you're interested in like some names like Google, Microsoft, where the broader markets are dropping, but these ones are down a little bit more, we're right into like a key technical area. For Google, we marked out this level last week, which is at previous all-time highs, right? It could bounce here, which we had a very minor bounce, but with the broader markets, this one's coming back down. Google could still bounce off this level. It could dig a little bit deeper down into 320 and still be bullish. As long as you make a weekly higher low, right? Google is still bullish. So for names like this, you're not trying to time a bottom, right? If you're interested in long-term, right, you're buying on dips, looking for an eventual pushback towards that all-time highs. If you're trying to swing trade this or time a perfect bottom, it's going to be a lot more difficult, right? It'd make a lot more sense if you're trying to do that on names like names like semiconductors and memory names, right? If you're trying to time a perfect bottom on Microsoft, that is very difficult, right? Because this one now, you see a nice bounce, very similar to Netflix. And what we had was a nice bounce and rejection and back at the lows. Microsoft, similar kind of thesis. We had a nice bounce all the way up into 460 rejection, and now we're back at really our this year's lows. So for Microsoft, key level is going to be that 360. As for Meta, key level, similar thing, rejection. Now we expect to push down into that 520 here. Amazon, if we're looking at this on the weekly time frame, right, even the weekly, right, we kind of rejected here on Amazon. We're most likely probably going to return back into that 220 here. That's kind of the area that we broke out from. Amazon showing a little bit weaker price action. 220 is going to be the area you're going to keep an eye out for, kind of this original area that we broke out from. Netflix is coming into a key technical area. So if you're interested in Netflix, right, 70. At this point, this is pretty much a 50% retracement from these lows. Let's mark out the Fibonacci. If you're interested, 50% retracement, 61.8. That's kind of your golden zone here for Netflix. So we had that first initial bounce right off that 50% retracement, which gave you a nice bounce. And now we're coming back down into that 50% retracement once again. So for Netflix, more so interested in long term, this is a good technical area, right? Low risk around that $70 a share, kind of that 61.8, along with that 0.5 retracement. And of course, for SpaceX, this one's dropping here now as well. So we kind of talked about SpaceX the first couple weeks, first days being bullish. We ended up having a really solid move after IPO for a nice push higher. You can see in the past couple of days, we've been just having a lot more weakness here on SpaceX. If we're talking about like a longer term outlook, 3 to 6 months from now, I do expect SpaceX most likely to be lower. Right now, it's at our not pre-IPO price. Basically, what we had was an IPO, 150, right? The actual shares came in at 135, but we opened up at 150. So now for SpaceX, we probably are going to revisit that IPO price, which is 135. Right now, you can see we're kind of having a bigger sell-off here. If the markets want to continue to show weakness, which currently we are showing a little bit more weakness. For SpaceX, pretty big drop, pop, and now we're fading once again. Pre-market lows and of course 135. If you want to see now for SpaceX any sort of buyers to step in, we're going to have to just see it consolidate, right? Right now, there's a lot of volatility. You just like to see it kind of consolidate and then eventually push back towards the upside. If, of course, you're in long term, you're not going to worry about, right, intraday price action. All right, let's head on to some other tickers that we have now as well. We're kind of running a little bit short on time. We went over kind of the broader markets. I'll have like a video most likely later into the week or maybe even potentially today, talking about MU earnings coming up and the broader markets and what to expect. But with that being said, let's talk about MU. Right, you can see these names are still so strong. Right, MU, as you can see, still above our previous all-time highs, and we're very bullish. Right, what happens with, of course, earnings coming up as well? That's the key thing. Um, if the markets want to, if MU, let's say, has a negative reaction, right? We kind of saw with AVGO, right, 2 weeks ago, right? AVGO, one of the bigger names, especially when it comes to semiconductors, we had about a 10% drop on AVGO. And what happened? The overall markets had a huge market sell off. Of course, we're in like a key technical area, right? SMH ended up dropping as well back down into key technical areas. SPY ended up having a pullback. That kind of started off the original broader market sell off here. Was that AVGO earnings, right? Negative reaction. So that was huge. If we're talking about MU, right now we're down about 8%. Let's say if MU, for example, was to drop another 10%, right? That would be a pretty significant drop on MU. And then the rest of the semis are going to drop, right? Memory, semis, and then that would cause a bigger market sell off. So right now, everyone's waiting for that MU earnings, right? This is tomorrow, Wednesday after close. So it's best at this point, right? If you're not already positioned well, right? Let's say, for example, you're already in Intel, right? You're in a good technical spot. Let's say if you're in down from 100, right? You don't have to worry about this, right? This is just a retracement. Or even let's say you got in on last week with this like cup and handle, right? You would already be taking profits up into key technical areas. And let's say if it did come back down, you can just end up getting stopped out of your position, right? What we're waiting for here now is we're not putting on any brand new positions, at least currently on full size until we have that MU earnings, at least for me. I'm going to be a little bit more patient. If I do like any low risk entries, right, I'm going to go in for a potential bounce play here today. And maybe if the markets have a super strong bounce, we could potentially look to kind of trail it overnight if we have a huge buffer. But right now, with MU earnings coming up on Wednesday, we're just going to be a lot more patient, all day trades, shorter term trades until we have a more clear direction. And we really want to see how the market reacts with, of course, the earnings that we do have. So with MU, at least for today, we're just pulling back into a key technical area. This is the area that we would like to see bounce. If we get a bounce, awesome. Push back towards the upside is in play. If let's say the earnings comes in, we could see a potential reversal. So we'll just wait for that. At least for today, the IV is going to be elevated regardless. MU is probably not a ticker you want to trade just because of the IV with earnings tomorrow. So we'll just be a little bit more hands off. SNDK. Key levels that we have marked out on SNDK is really this previous all-time highs. We had this level marked out here as well. It seems like we're kind of gapping underneath. So for SNDK here, let's go on to the hourly time frame. There's really two scenarios, or if you want to see upside, reclaim back above, continuation. If we reject, we could see kind of this potential head and shoulders play out right off that 2150. Sorry, as for Intel, INTC, this one's right at our key previous all-time highs level. So nice push on Intel. We end up having a nice break towards the upside. Past 2 days, fairly bullish. This one, of course, is pulling back with the broader markets. Key levels that we have marked out, previous all-time highs. So for INTC, key levels that we have marked out coming into today is just going to be this previous all-time highs level. If we want to see a push higher, right, reclaim back above for a move back in towards our 135 and potentially above. If we kind of reject, we can see a little bit more consolidation and a push down in towards our pre-market lows and potentially our key level from last Thursday. WDC pulling back here as well. A lot of these ones, right? Something like a WDC, right? Where's your next best buying opportunity? Really, it's at your 600, right? We had a nice bounce, continuation, our retest level. You could kind of mark out this like 9 EMA. I would like to see a potential retracement down towards 600 and look for a potential higher low from there. So for WDC, at least if you're looking at this on the lower time frames, the only other key level they have marked out is 660. Potential mini bounce on 660. If you get underneath, if you get underneath, you can see a potential mean reversion. MRVL, we talked about this potential rejection here off that 320. Now we're just going to consolidate a little bit more. So most likely for MRVL, first dip got bought up. Now we're back inside the middle of the range. It's going to do something like this, right? It's going to bounce off that 260, and then eventually you're going to be looking for that. Still either one or two things, the bounce play here off that 260 or waiting for the break above 320 for a continuation higher. TSM fairly solid. This one came back down to that previous day highs, but you can see pretty big gap down, right? That just happened with the broader markets in itself. This one was breaking out and it had nice continuation. Now we're just going to essentially retest that previous breakout level. And then a lot of these ones like Hood, most of these names, as you can see, are selling off. So coming into today, ARM, this one, similar thing, right? I talked about ARM yesterday. It didn't really make too much sense if you're looking to buy ARM at its all-time highs, right? A lot of people are trying chase. That's why I don't like it. Couldn't go higher, right? I mentioned yesterday it could go higher, but just risk reward ratio wise, now, right, you're already underwater, especially if you're buying a position at our all-time highs with the overnight potential. Was anyone expecting this overnight gap down? I think most people weren't expecting it because the markets are at key technical levels. That's what sometimes happens, especially if you're holding swings, right? There's potential overnight risk. In this case, we're gapping down 2-3% on the Qs. That means your individual name is going to be down 6 to 10%. So for ARM, right now we're already back at a key technical level. Now this is where we want to start looking for opportunities, right? When we're closer to that 9 and 21. So with that being said, let's talk about let's talk about the game plan coming to market open. As I mentioned, we're going to focus in on the broader indices today, the SPY and Qs, right? There's so much volatility on the SPY and Qs, we can look to trade the indices themselves. If we want to look for a potential pop and fade, this is going to be one of my main scenarios coming to market open for a continuation lower, right? Rejection off the 720. If let's say within the first 5 minutes or 5 to 15 minutes, price is really bullish and we end up flipping back above, then I'd be interested more so of this potential reclaim entry and actually look to take price back towards the upside, right? Not the full daily gap, as I mentioned. That's not realistic, right? But we can look for potential mini day trade where we can target our 725 and potentially like 730 maybe. But this would be more so like a mean reversion setup. So all the trades are going to be based off of our last week's lows, 720 today. SPY, similar thesis. It's a little bit further away, but we're going to keep an eye out on our 738. That's going to be key. And then for the SMH, we're going to mark out that 640. At least for day trades, there's a lot of things that we can look at, right? Just because there's going to be a lot of volatility this morning. Let's keep an eye out on NVIDIA. This one, a lot weaker compared to the rest of the semiconductors. So now let's keep an eye out on NVIDIA for potential move back down into that 200. So NVIDIA is going to be one of my main watches for potential pop and fade today underneath that 204. AMD, not that interested in shorting this one just because it's so bullish on the higher time frames. But AMD, if you can get underneath that 510, I wouldn't be opposed to looking for a potential short position underneath 510 for a move back down into maybe 500 and 490, right? That's a possibility. As for everything else, right, Tesla, not really interested in trading in. Apple, like all the Mag 7 names haven't been that interested, right? Maybe like a Netflix, this one kind of finally had her flush. But a couple names like Microsoft, there's still a little bit more room towards the downside. So these ones have been weak. If you want to continue to see weakness on these ones, right, for something like Microsoft, pop and fade offer 374 for continuation lower. Google, previous day lows here is going to be key. And then we'll also keep an eye on SpaceX. So SpaceX has been dropping the past 3 sessions. Previous day low is marked out. Let's keep an eye on a potential pop and fade here on SpaceX. If we see any sellers step in, we could be looking for the rejection for a push down and towards that pre-market low and potentially below here on SpaceX. So we'll keep an eye on some of the semis today. MU, similar thesis. This one does have earnings, so we'll actually be a little bit more hands off on this one. If you want to trade shares, that's fine. If you trade options, weekly contracts, the IV is going to be elevated. As for a couple other ones that I like, INTC, let's keep an eye on INTC.
interested for potential mean reversion back towards the upside, or I would even be opposed to looking for potential short position where we can look to trade this down into that pre-market low. And of course, we had that gap that we created here as well. So for INTC, let's keep an eye on that 132. And then for the rest of the tickers, kind of similar thesis, right? As for today, the main thing is the broader markets in itself. Whenever we pull back, the Qs is what's going to be key. If the Qs bounce, the rest of the markets are going to look to bounce. If the Qs continues to sell off, of course, the rest of the names are going to continue to sell off as well. So at least for today, right, we're going to keep an eye out on our key technical levels that I mentioned. We're not going to have a bias coming to market open. Don't be overly biased to the short side or the long side. Some people look at this gap down here and be like, oh, I'm just going to automatically short coming to market open. Right. That's not kind of the mindset you want to have. If the market shows bullish price action within the first 15 minutes, then we're just going to base it off of the reaction that we have off key levels. And of course, as I mentioned, the main thing is going to be MU earnings tomorrow. So we'll be patient. Keep that in mind for tomorrow. That's going to shape up the market. We talked about that on the weekly outlook with the MU earnings on Wednesday after close. So yeah, with that being said, I'm going to call it a day here. Hopefully you guys did enjoy that. If you did, appreciate if you guys drop a like and sub. If you guys haven't joined the free daily watch, the set of course is in the link in the description below. And I'll see you guys all tomorrow. All right. Take care, everyone. Have a great rest of the day. Peace.